Hello and welcome to the stock specific class here for Thursday, June the 30th. Apologize for a little bit of a late start here. I had something I had to take care of here right before I started class. But if you have any questions during the week or any questions I don't answer in the live class here, make sure you send those to jerry@traderspro.com. We are looking at the end of the quarter today, and with the end of the quarter, sometimes you can get some moves in the market that aren't necessarily based on expectations going forward. They could just be based on the portfolio or the statements that the portfolio managers need to send out at the end of the quarter. End of June is the end of the second quarter of the year, so basically the halfway point of the year. And when they send out these reports, a lot of the clients like to see the blue chip stocks. They want to see that they're owning Microsoft and Apple and Amazon. But during the course of a particular quarter, these fund managers might be trading these obscure companies that people aren't aware of or don't know what they do, and to make the return. It's sometimes these smaller companies that they buy at $20 a share that go to $30 a share, so to speak. They can have a big impact on the results of the quarter, but it's not what clients necessarily want to see, simply because they're not they don't know what the company is, they don't know what they do, they get a little nervous, and these fund managers have to, they get bombarded with questions. Why are you in this? Especially if the smaller trades aren't working out as well, they really get bombarded with those questions as well. So a lot of times right at the end of the quarter, what they'll do is they'll get into some of the more well-known names. They don't have to be the big tech either. They could just be just companies that people are a little bit more familiar with, and then they get right back out of them at the start of the next quarter, or vice versa. They get out of certain stocks and they get right back in them, and so there's a lot of this shuffling that takes place that has nothing to do with what the future expectation is. They might be getting into Amazon just simply to show it on the report, not that they want to hold it for the next 6 months or even the next 3 months, the next quarter. So you got to be careful on days like this to not get too bullish on a stock that looks like it's doing pretty well for the day, not get too bearish on it because it's not doing very well for the day. In other words, you get a lot of head fakes and a lot of false moves that can happen on a day like this. So just be aware of that. Doesn't mean you can't trade or you can't make those decisions, but if you do buy into a company and then suddenly it reverses over the next few days, it probably was one of those stocks that was just window dressing for the portfolio and then got reversed. Remember, it's these big fund managers that move the market, so they are buying and selling thousands of shares at a time, and so it can cause the markets to have these swings. The overall trend still looks pretty bearish, but we have a little bit of a bullish reversal candle today. After opening lower, we rallied up a little bit. And again, I wonder if we'll look at it when we look at the chart here, but I wonder if some of that has to do with this end of the quarter type behavior. As far as the direction alerts, again, not much has changed from Tuesday's class. Momentum has moved down a little bit. It's kind of getting close to entering the sell area there, and depending on how we close today, if we do close lower, it could push into that range there. But again, I talked about this on Tuesday. We're looking at the recent rally as just being a rally within the downtrend, that we should continue to move lower. All this is really telling us is that we've alleviated that oversold condition, but we could move right back to it with the market sell-off. And if we do get back to these extremes, then you start to wait to see if there's a little bit of a bounce or a little bit of an oversold rally that could take place at that time. So That's usually what we're looking for when we're looking at these indicators, is overbought, oversold. When they're in the middle, they're really not, they're basically not telling us it could go up or down. It could go either way at that point. And then we're going to rely on our chart analysis and our price action analysis to tell us what that likely direction, what the direction is more likely to be, up or down, depending on how that trend is acting. Breadth indicator is in the extreme, not to the far left side of the extreme, but it has moved from that high range into the extreme. I talked a little bit about this on Tuesday as well, that one of the things that we notice, and it's a sign of a bear market rally, is that you rally with little breadth, meaning there aren't many stocks participating in the rally. And what happens is it's a signal that the rally's not, you shouldn't really trust the rally, or you got to be very skeptical of the rally when there aren't many stocks participating in it. And that's kind of what we've been seeing lately. But this is also suggesting we could still get even more extreme, where it pushes further to the left side of that range there. And then lastly, of course, is the sentiment, which is still relatively high. We'd like to see a sell-off that pushes this back. We'd like to see it push it into the fear range. But even if it gets to the left side of the trending range, I'd be happy with that, just because it's been so high and extreme for so long. Again, one of the signals, for those of you that might be a little bit new, one of the signals of a market bottom is that there tends to be a little bit more fear in the market, or a little bit more concern in the market, and we just haven't seen it. We've had these sell-offs, but they've been controlled sell-offs. They haven't been panic sell-offs, and so it tells me that they're not done yet. At some point, we're going to have one of these big days where it's just ugly. It's a really big sell-off. Everyone's wondering how much further we're going to drop. Now we are getting into that stage, though, and I mentioned this a little bit as it relates to crypto, that again, Bitcoin moved down again today. We'll look at that chart here in a second, but you start to wonder, boy, how much lower is this going to go? We've already dropped so far. We're already very low. How much worse can it get? And that is one of the feelings that you get at a market bottom, is that almost that feeling of hopelessness. Like every time it rallies, it's like, yeah, I've seen this before, it's going to roll over and drop again. And we're starting to see that now with some of these rallies. This recent rally, how many people have been saying, it's just a bear market rally. That's one of it means we're getting close to that bottoming process, because people have bought that dip so many times in the last few months, and then been burned on it as it rolls over, that they start to, again, not trust the rally. The rally starts rallying. It's like, hey, I'm not going to. It's like the Peanuts character, pulling the football away. How many times do you do it before you realize she's going to pull the football away? You start to you finally. Collectively, as a trading crowd, you finally say, I'm not buying the dip anymore, because it's going to roll over and drop. And usually about that time, when everyone kind of feels that way, is when it's done dropping and starts rallying back up. So we're getting close. And I've shown you a lot of signals that we're getting close to a bottom. One of them, well, let me go through the buy-sell ratio. Let me go through these other direction alerts here real quick, and then I'll show you the indexes. But buy-sell ratios have come closer together, so they've alleviated that oversold condition, but they're starting to widen out again. And then again, this sentiment indicator is right in the middle there. It could go either way to get to these extremes. It gets down to here, it usually means the market could rally a little bit. If it gets up here, it usually means it could pull back. We haven't been overbought on this indicator for quite a while, but what I was going to show you here is, if you go into the index tab here at the top and you look at the buy-sell ratios of the entire market, you can see that man, almost all of them are they're getting very extreme, meaning there's a ton. You look at the Russell 3000 here, 844 of the Russell 3000 stocks are sells versus 213 buys. There's a whole ton of them also in the hold range right there, which means that they could go either way. These could go to sells, or if we rally, they could go to buys. But this ratio here is pretty low. And now it's been more extreme than that. A couple weeks ago, I showed you this, and it was even more extreme than this. We were down into the single digits on the ratios there, but but it tells you that that tells me we're getting close to a bottom. But again, we haven't had that flush out move yet, and that's what we're kind of waiting for. Also a good signal would be the VIX. I've been telling people we're not even going to talk about a bottom until the VIX gets above 40. So if you see a spike in the VIX above 40, you'll know that I'm not saying that will signal the bottom. Nobody can take the bottom consistently, but it tells you that you're a lot closer to the bottom at that point. And so that's kind of one of the final things we're kind of waiting for before we're going to get more aggressive with buying things. I know it's tough. These classes have been a little bit boring probably the last couple of months because we haven't done a lot. But I'm telling you, it's going to pay off because we've got all this cash that we can start to deploy and get very aggressive with. And we're going to get aggressive with it when the market's very near that bottom and has that potential to really go up at that point. All right, let's take a look at the chart indexes here, or the index charts here, starting with the S&P. Last on Tuesday, we were talking. I think we were talking about this. We call this an evening star candlestick formation, where Friday we had the big move up. Monday we had the pause right here, and then Tuesday we had the big reversal candle that came back down. This usually signals a reversal from up to down, and again, in the context here, we've had this impulsive move down. We had kind of a little bit of a bearish ABC pattern moving up. We moved into this key resistance area right here that I pointed out, and it was worth noting that not only did we hit that resistance area, but it filled this gap right here that typically happens a lot of times. Now, the big question mark, obviously we yesterday was just a little bit of a pause day. We really didn't drop much yesterday. And then today we got a little bit of a bullish reversal candle. One of the things I pointed out on Tuesday was it was still possible that even with this downward move that could be just wave B, and then you could get wave C that comes up and fills in this gap. There's another, there's a kind of a support resistance area in this area right through here. So that's up a little bit higher than that, but it could come up and fill that gap. I don't think it would get up past this, because if it goes to another high right here, that would be more bullish for the market. We'd have to recognize that as being more bullish for the market. But this is where it's tricky, because on a normal day, if I got a bullish reversal kind of like that, I'd feel like, hey, we're heading higher, and that's probably the scenario here. Is that's wave A, wave B, we're going to get wave C, and then we're going to drop. But again, when you get that on the end of a quarter, end of the month, and the end of the quarter, you wonder if it's just that window dressing that's coming out right now, and then it's going to reverse right back down the first few days of the next month. Now, there's another argument that we could rally for a couple of days off of this. I think I talked a little bit about this on Tuesday, that there's a very bullish seasonal period right here, starting July 1st, usually right around the 4th of July. Usually it starts July 1st to July 5th or 6th, slightly after the 4th, that tend to be very bullish. It's like 80% of the time you'll have upward moves on those days. Again, I'm always a little bit skeptical about seasonality stuff, because, I believe you should never, ever, ever base your trade decision exclusively on seasonality. It's like the Santa Claus rally in December. There's so many different interpretations of what a Santa Claus rally is. Some people feel it starts, around Thanksgiving. Some people say it's 2 weeks before the holiday, or it's the week before the holiday and the week after the holiday. I mean, everyone's got these different interpretations, and the silly thing about that the Santa Claus rally in general is that when you're talking about a 2 or 3 week period, you can find a 2 or 3 week period in every month that tends to be bullish most of the time, and but it's never really consistent as to the exact time during that month. It's just sometime during the month. So you got to be real careful never to base your entire decision off of seasonality. However, again, if you're in a situation like this and you're seeing a bullish reversal candle today, and there's a possibility that you could rally up for a few days, creating a C leg of a bearish ABC pattern, and you're in a historically bullish seasonality or seasonal period, that could be a confirming factor for you being bullish. That could be something that you say, hey, the probability is that's an added probability to what I'm already analyzing. But it should never be the leading probability. It should never be the main reason why I'm getting into a trade is because of seasonality. So just be aware of that, because there's a lot of people who will throw these out. You'll hear it on CNBC all the time, and you've got to just never just run out and buy or sell something just off of that. One of the recent ones that happened was the sell in May and go away. Now we did have a drop in May. But that was never going to be the reason why I was going to short or buy puts in a market. Was just simply because the market tends to drop in May after rallying in April, because it didn't rally in April, it dropped in April. So the fact was we were already in a downtrend, and that the historical part of that phrase just didn't make any sense. So anyway, that's something just to keep an eye on or consider. Again, we'll see how tomorrow trades. But just, when we're back here on Tuesday next week, we'll be looking at that to see if indeed we did rally. And if we did rally, we'll be looking at, again, this key area right here at about right around 400. If you want to get a number behind it, would fill in that gap right here. And then up in this area, it's around the 408, 410 area. I don't think it'll get up that, well, you never know. And it could be that we just reverse right back down and we're lower by next Tuesday as well. And if that happens, and again, you'll look at today, and that'll be part of your learning process. You'll say, hey, yeah, that's why Jerry didn't trust a bullish reversal candle on the end of a quarter day, because it was less reliable. And again, I'd like to see how we end up closing too, because it could make that easier if we come off the highs of the day and we end up with a more of an indecision candle, something like this. That would lead me to believe it's a lot less likely we're going to rally, and more likely that we're going to end up rolling over the ball and dropping. All right, so the other indexes are pretty much the same. One thing that we do like to keep on is the small caps to see if they're outperforming in any way. They tend to be a leadership index, but even then, this is looking more indecisive. That candle's looking a little bit more indecisive than the other two, or the other indexes there. So we'll keep an eye on that going into the close. The big talk today is that we're seeing a rally in bonds. Bond yields have been dropping. And, we did talk a little bit about this on Tuesday, because we did have a little bit of a bullish candle. We had this whole pullback right here, but we had a little bit of a bullish candle right here, had a bullish reversal candle on Monday. if you went back to Tuesday and reviewed that update, or if you were there live, you heard me talk about the possibility that maybe this was just wave A, wave B, and we're getting wave C right here. It still looks like that's the case, that this should roll over and have another impulsive move down. However, this is going to be key right up in here. That was the previous lower high that went to a lower low. And if we move up above that, now we have a higher high taking place. But as I mentioned on Tuesday, and I'll mention it again here, that would have to be, it would have to rally up above there on a very impulsive looking move, meaning we'd have to keep going up. The bonds would have to keep going up and up and up each day. If they're back down again and then up and it's more choppy, then it's more likely that we're going to get another impulsive move down, that behavior. And we saw it back here where it started to look like it was going to break out, but it was ended up being more choppy, and then ended up having another impulsive move down that went to a lower low. So the point I'm trying to make is it's not acting like an uptrend yet, not even the early stages of an uptrend. It's just had a couple of days where it's moved up. That's it. And so until it starts to break above some of these key levels or starts to look more impulsive on the rally up, we're going to assume that this is just a rally within the downtrend. That downtrend is going to continue. Again, we're not trying to be market psychics, and that's probably one of the hardest things to work on as a newer trader. Is we want to be right. Everyone wants to be right. That's human nature. Many of us associate being right with being smart, and we don't want to look dumb, right? So we like to be able to tell our friends and relatives that this stock is going to go up and it goes up, or this stock is going to go down and it goes down. We like to be right. When we're right, it makes us look smart, and obviously everyone wants to be smart. The problem is those two things are going to kill you as a trader. If you want to be smart and you want to be right, again, we all want to be right. But if that's your obsession, is in being right, you're going to make a ton of mistakes, and you're going to lose a lot of money because of it. There's an old Wall Street phrase, and I've probably used this before, but I'll use it again for those that are new. There's a Wall Street phrase that says you can either be right or you can make money. Now, again, I'm not suggesting that you can't be right and make money, and a lot of times you have to be right to make money sometimes. But the point of that phrase is that there are people that are in the markets not because they want to learn how to trade and do it right. They want to brag. I've as a coach, I've dealt with this for 20 years. That I've had students that they're obsessed with the reason why they're learning how to trade and they're learning all this stuff is they want to be able to brag to their friends that this stock was going to go up and it went up, or this stock was going to go down and it went down. And the biggest problem that they run into is they don't manage their money properly. When it doesn't work out, they can't admit they're wrong, because that means they can't. They gotta go in front of their friends and say, I got that one wrong. And their friends are not going to think they're smart. They're not going to be right. And so they hang on to it, and they just hope it turns around so they don't have to look dumb or not be right. And obviously we know that can't work. You've got to be able to quickly recognize when you're wrong and quickly do something about it. Don't let the damage get any worse, because we're always going to be wrong with trades. It's part of the process. And so you got to check the ego. You really got to check the ego at the door if you're going to make money consistently. And you have to. There's just no other way around it. And so I like the wisdom of that phrase, because I think it's important that you right now take inventory of yourself and say, why am I doing this? Why am I trying to learn how to do this? Is it because I really want to make consistent profits in the market and make money? Or, am I doing this because my friend Joe over there, it constantly tells me about stocks that he's getting into, and it seems like he's making money every trade he gets into, because he's never going to tell you about the trades he loses on, right? He'll never tell you about those. So it seems like he's always right, and I always feel dumb because it seems like I'm never right, and so I want to learn how to do this so I can get back at him. Well, you probably want to pick another thing to get into or do, because you're going to get killed. And your friend Joe is not telling you the truth. He's not telling you when he's losing money and when he's losing in trades, and so there's a bigger problem there. All right, so anyway, that's what I think is developing there in the bond market, and we'll see if it does end up playing out that way. And we'll probably have a better idea of how that looks on Tuesday. See if we get any closer to this previous high up here. Gold, again, I told you the range in gold to look at. Looks like we're about to break below the bottom part of that range. I said if we break above here, that would be bullish. If we break below here, that would be bearish. We're right at that level there. Now, again, it could hold as support. We could bounce off of that. We haven't broken anything yet, but the fact that we're down at this level here, you assume that we're probably more likely to break to the downside there. Again, on Tuesday, we should have a better idea of what happens at that area and what direction gold ultimately ends up moving in. Oil had a big downturn. Now, I got out of my USO trade yesterday, not because I got stopped out, but because I got a big bearish reversal candle. That's what we call a bearish engulfing pattern. You had an update. Well, we had a few updates. Usually this works a little bit better when you have a longer upward move, but this was over a week where we moved up, had a bullish candle this day, a little bit smaller, but a bullish candle that day. Oil opened higher the next day, which was yesterday, opened higher than that previous candle and then closed below it. So it opened up here, closed down here, completely reversed and engulfed the day before. That's what we call it, a bearish engulfing pattern. It usually signals a trend or reversal. Not always, and it used to be that this pattern was automatic. I remember I would trade this all the time, and it was easy money. Anytime you saw it, it would almost always work. My theory is that because it's so easy to recognize, and as more and more people in the world have learned about candlestick analysis, and it's become less reliable. Hasn't worked as often as it has in the past, but you still have to respect it when you see it. It is a sign of a potential reversal. Now, again, this is, the way I'm managing the portfolio right now, I'm using all the knowledge I have in managing it, and that includes candlestick formations. That's why I'm teaching you this, though. This is something that you can use to make a decision. Now, if I'm in oil if I'm in this trend and I'm not trying to jump in and out, I really want to just close my eyes and be on autopilot, then, I'll have an actual stop loss in place. I won't even think about it. I won't even look at the chart. I won't even watch it. I'll just let it do its thing. It'll let me know on my statement when I got stopped out of it, or when it got me out of the trade. And by the way, you can move your stops up. You can have a trailing stop. I've done that with some positions as well, where I'll move the stop up a little bit. And I'll show you how to do that if you're new on some of these trades. We'll move the stop up. But right now, because we're in kind of these choppy conditions, we really don't have we're in a downtrending market, and yet we're trying to be long all the time. I'm not shorting anything in the portfolio. We've used some of those inverse ETFs, but even with those inverse ETFs, I've jumped in and out with them. I'm just using them to hedge or make us a little bit of money here and there. It is a different style of trading I'm doing right now, and it's kind of like survival mode. You're just trying to make something while you're waiting for the market to bottom. And although this is not typically what the type of trading you'll be doing, I think it's invaluable. I think it's great that you're getting started. in this type of market environment, because you're learning some very valuable things that you're going to use in the next market bottom, and the next time the market trend declines, which it will. And now when we finally bottom here, it'll probably be 5, 6, 7 years later that we'll have another cycle where we'll sell off again and have a bear market again. But you'll be able to use these skills to deal with that type of market conditions. And again, you don't deal with it very often. The other alternative, though, is just to get out, stay out. I mean, I've talked about that as well. But in these, you're in a bear market. The market hasn't bottomed yet. You haven't had that panic sell-off yet. And we are pretty much in cash. We don't have very much in the portfolio right now. You can't just get out and just stay out until the conditions change. But what I'm trying to show you here is, in the meantime, if you do want to be active and do something, you're going to rely on tighter stops. You're going to rely on reading price action, reading these candles. And so I see a strong bearish reversal candle. This wasn't a clear ABC on this pullback. This looked impulsive down. So I'm already wondering if maybe there's another move down. This is maybe wave A, wave B, wave C. And I see a big bearish reversal candle right here. I just jumped out. Okay. I ended up getting out because I remember I got in. I think I got in a little bit late. I think it was on this candle right here. So I think I took a little bit of a loss, but it was only like $100 or $200 or something like that. It wasn't that big of a deal. And sure enough, we're down lower today, and it could be that this is wave C, and then maybe it tries to have a bigger rally. So anyway, I jumped out of that one, and that's my outlook on oils, that maybe we're in a wave C, or it's possible the way wave B can sometimes form. It is possible that this is wave A. This is just wave A of B, B of B, and then it rallies up for C of B, and then you get that larger wave C down. So if it does pause right here or stop, it could come all the way down to here, and then rallies back up. That's what I'd be looking at. Is maybe we're still in wave B. We still might have that one more downward push right there to complete the correction, and then it could start to move up again. So anyway, this is looking more bearish right now. And by the way, that's not a good sign for the market. One of the things I've talked about a little bit recently is that oil has been what's holding. It's been the only thing trending up. But what we do know about market collapses is that when you get to a market collapse, almost everything starts dropping. There is no safe haven. There is no place to go to put your money. And what we've seen a lot lately is bond market has been dropping. Now it's rallied the last couple of days here, but it's been in a downtrend. So you can't really go to bonds. Crypto has been collapsing. You can't go into crypto. Equities have been dropping. It's trouble getting into equities, although oil has been going up. And so people have been piling into the energy stocks because it's the only thing that's been going up. Well, what happens when that starts to roll over and drop? Now there's nowhere to go, and that's part of what can create that panic, right? Remember, we're talking about panic of big institutional traders these are seasoned traders. These are people that have seen 20 or 30 years of market conditions. They're not spooked very easily, but they're human. And when you get to a point where normally they're like, okay, we're no big deal. Bonds are dropping. I'll just get it. Energy's going up. We'll just get into energy. We'll just pile into energy. That's doing well. We'll keep riding that trend. But what happens when that rolls over and you're looking around saying, I can't just be in cash because my clients won't accept that. They want some return on their money, particularly in an inflationary environment. Think of the pressure that's under these fund managers right now with inflation. Inflation hasn't been a problem for so many years. They can't sit in cash with inflation because their clients are losing money from inflation. So there's extra pressure on them to get into something. And when everything starts breaking down, there's nowhere to go. Imagine the panic of these people. That's what we're waiting for. That's going to happen. I don't know exactly when. That's what we're waiting for. But So when it starts to happen, you'll understand why it's happening. Why is it dropping so fast? Because they got nowhere to go. And all of them are trying to get out at the same time, right? That's going to cause that VIX to spike above 40 or higher. And that's when you're going to have a Dow down 2,000 day, and you're going to look at that saying, "Holy crap! I thought we dropped." I got in because I thought, boy, how much further could it drop from here? And wow, it could drop a lot further. And that's when you know that, okay, now is a good time to start nibbling or getting, adding a little position. It may not be the bottom, but it could be very, very close to the bottom, and that's when we're going to start to get into some positions. We're not going to load up, but we'll start to look around and see because by the way, when we do bottom, there's already going to be sectors that have bottomed already and are already starting to move up. And so that's what we're going to start to look for and we've already started to do that. I've pointed out a couple, and we'll look at some when we get to the specific stocks here in a second. But there are going to be stocks that are going to lead the way out, and we'll start to get into those, and then add more as the market rebounds and starts moving higher again. Until then, again, it's going to be kind of boring. We're going to have to be a little bit patient, but we'll get there. The dollar has been moving up recently. Today it's down a little bit, and it could have a little bit of a bearish engulfing pattern. But I also talked about how this looks like a possible cup with handle pattern. It looks like we could be forming the handle. And I think on Tuesday I talked about we could rally back up into here, but we could also come back and forth within this range to develop that handle. If we break out above here, that's going to be very bullish for the dollar if we can do that. But there might be another move down towards this lower range before we break out. You need to have that a little bit more of that back and forth to look like a handle. We're just guessing that this is a handle right now. So that might just be what's happening, is maybe we move down to this range right here, then let's see if it holds the support and moves back up. So right now it's consolidating, but overall the trend looks like it wants to go higher, and that we're expecting it to ultimately go higher. The VIX, again, kind of an indecision candle today, but it is a little bit more of a bearish candle because we are lower than where we opened. This would be opposite of what the market is showing us, which is a bullish reversal. So again, it's possible that the VIX comes a little bit down, a little bit lower right here. That it's hard to read. It's hard to read today with end of quarter. I think it is interesting, and I know these price levels don't line up on the VIXY. This is the ETF if you want to trade the VIX. But if you have another chart that can look at the actual VIX, we did open above 30, and 30 is kind of the level where it tells you that the professional traders are starting to freak out a little bit. They're a little bit concerned. It is a very bearish signal to get above 30 on the VIX. Like I said, we're waiting for 40 to indicate panic, and we haven't reached that yet with any of these sell-offs we've had this year. But if you're just using the VIXY, we'd have to get above this high right here to really show the market is freaking out. So that's about 24 on the VIXY. We'd have to spike above that to really indicate panic selling. But it's worth noting that we had the bullish reversal candle on Tuesday. That's when we had that move down in the market. We had the downward move of the evening star candlestick formation on the S&P. So it's not surprising that the market has gone a little bit lower since then, although again, yesterday was kind of a sluggish move down, slight move, and then today a little bit of a bullish reversal. But that could be a little bit of a higher low right there. We'll see. again, we'll see how things close, because again, if the S&P closes off the highs of the day and it looks a little bit more indecisive, there's still a good chance we could drop tomorrow and continue to drop next week. So we'll keep an eye on that. SMH, again, a little bit of a bullish reversal candle today. And because of that, I might just get out of the SOXS. I did get out of the USO. And so I don't need to hedge a lot. I still I'm in ADM, which I told you I got into on Tuesday. That one still looks okay. I might just keep the SARK as a hedge against the ADM trade. We'll look at the portfolio here in just a second. But that'll be interesting to watch as well. If you start to see chip stocks rally significantly, that might be well, it could just be wave C, because it is possible this is just wave A, wave B, wave C of a bearish correction. This was impulsive down right here. Now on Tuesday we were looking at this impulsive down, and this was A, B, C, and then we did have a couple of big down. Well, we had the downward move on Tuesday, another downward move yesterday, but because we're kind of holding right here, again, you have to wonder if maybe it's sometimes those ABC patterns, they're not always A, B, and C and then drop. Sometimes they can be A, B, C, and then just choppy. That's why I say a corrective move is a more choppy, more sideways, because sometimes you can have these just multiple moves back and forth before you drop again, and that's still a corrective looking move. So even if we start rallying up right here a little bit, you're still in kind of a sideways range right here. It still could mean that this thing could roll over and drop. But you have to respect the fact that in the very near term it could rally, and I don't want to be in an inverse ETF if this because that's going to go down in value if this rallies back up. So I might go ahead and just jump out of that one. Transports, Dow Transports. You want to compare this with the Dow Industrials. Again, a little bit of a same kind of situation here, a little bit of a bullish reversal candle today, but did have a recent lower high, lower low, still acting like a downtrend. Could it be this is A, B, C, and then it drops? Yeah, it's possible that could be happening. So we'll have to respect that. Again, things should be a little bit clearer on Tuesday as to what today's move meant. But you can see why I hate days like I hate end of quarter days. I hate earning announcement days for individual stocks, because they could go either way, and I hate feeling like I'm flipping a coin to determine my trade, and this is one of those days where I kind of feel like I'm flipping a coin. And then Bitcoin, you can see that move down. It's getting kind of ugly here. We talked about, though, it's not surprising. You go back with the previous updates, we said this is looking more sideways. This was impulsive down. Look how long it moved sideways here. Impulsive. You see the stair step down. Now we're going to a lower low. So we're in another impulsive move down. Now, we're going to continue to keep an eye on Bitcoin. And this is basically our proxy for all the cryptocurrencies, because they all kind of tend to move together. Bitcoin is the most popular cryptocurrency. It's the one that most people are aware of. That's why I focus on it. I am not a cryptocurrency expert, so if you start peppering me with crypto questions, I am not. I can tell you what I think of the chart. I can give you my feedback on a chart. I can do that with any chart. But I barely understand how crypto works. That's why I don't trade it. I don't have a lot of confidence in my understanding of it, and I have zero confidence in why people have. To me, it just has no. I just don't see where the value is. But you can make that argument with a piece of paper like the dollar. It really has no value. It's not backed by gold anymore, so it's just valuable because we say it's valuable. I get that, But I've been using dollars since I could walk, and I've been brainwashed, I guess you could say, over my entire life to believe there's value in that piece of paper. I haven't had that with crypto, so it's very difficult for me to understand why anyone else would want it, except that they say it's worth whatever, $20,000 Bitcoin or something. It's worth a lot less than it was a few months ago. That's what I do know. But I am going to continue to watch it because I believe that cryptocurrencies are closer to a bottom than a lot of other stuff. And so if I start to see Bitcoin starting to trend up or look like it's trending up, it might tell me that, boy, the equity markets are probably very close to bottoming, and we could see that panic sell off pretty soon. So we might start. I'm not saying that's how it'll play out. It could be that everything just drops that day when there's that panic sell off, but I'll continue to watch this to see, because it really is gotten to the point where with today everyone's wondering, oh, how much further can this drop? This is ridiculous. We're already seeing some cryptos go out of business. That's another sign of a bottom, and but yeah, that's looking pretty bad there. Hold on. Question: tech stocks. Micron reports earnings today. Majority of techs are showing year over end higher earnings. Could be a rally up. It's possible. It's always possible that the market could bottom and rally up. Like I said, I'm just going off of my experience. I'm not going to be looking at. I'll talk about some fundamentals from time to time. I'll give you reasons why I think that we could still drop or why we could rally. But most important is always going to be the chart. And so, I could end an update telling you, I could give you 50 reasons why the market's going to rally, and then the market could drop. And on the next market update, I could be telling you why the market's going to keep going down. And you can say, well, boy, how could you flip-flop like that in 2 days or whatever? Well, what's always going to be most important to me is what the chart is. And what's always going to be important to me is getting the direction correct, right? I don't care about predicting to you guys what I think is going to happen and have it take place. Yeah, that's always ego satisfying when I say, we're about to crash any moment. I've done this before. We're within days of having a massive sell-off, and then we get a massive sell-off, and everyone says, "How did you know that was going to happen?" Yes, it is a little bit of a nice ego boost to make a call and be right. But what I said earlier, if I get obsessed with wanting to be right and wanting to get that pat on the back, then what could happen is if I got done with the class saying that the market should go up, and then it starts going down again, and I come back on the next update and try to justify why I'm still right, why it's still going to go up, and why I should ignore why it's going down, that's not good. You're always going to have confidence in me if you see me flip-flop. If the trend goes the opposite direction, and I come into an update and I say, okay, forget what I said on Tuesday. This is what's happening right now. We got to respect that. I still might not have confidence in that reversal yet, but I am going to respect what is actually going on. We had this actually take place a little while back. Let me go back to the S&P chart here. Some of you might remember this, but a couple of things that happened. Remember back in here where I said, based on this price action right here, we should go higher. We're waiting for the breakout higher. One of the phrases I say all the time is whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to move after it's done moving sideways. That's a very important phrase. You're going to be right most of the time if you follow that phrase, because most of the time that is going to play out that way. But notice a couple of key points of of that phrase I always point out when I say it is, one is when it's done moving sideways, it can stay sideways for a little while. The other is it's more likely to continue in the direction it was moving in before it moves sideways. It's not absolute. It's not always going to happen. Well, guess what happened? We dropped. And what did I do? I immediately turned from being bullish to bearish, as I should. I mean, that's what is actually happening, is it's dropping. I better recognize that. I'm doing that a little bit right here. I'm saying I still think the market's going to drop, but I have to respect a bullish reversal candle. Now, I do have an out on that, because if we fade into the close and have a pretty distinct tail on this thing, if it looks more like this, although that did end up still going up on that, but if it looks more indecisive going into the close, I could assume that we could still continue to move down. But again, I'm respecting what I'm seeing, and I'm willing to flip flop on it if the chart is telling me I need to do that. But back here too, we had this big rally. Hold on, let me move the chart up a little bit. It's back here in March, where I was expecting this. I thought this was going to be just a bearish ABC pattern, and then we were going to drop again, and it kept going up and up and up and up, and then more importantly, we broke out above here. Now we didn't break out very long, but as soon as we broke out, I'm like, maybe we're going to go up. Maybe I have to look now at the possibility that I have to at least assume that maybe we're back up. Maybe we are going to move back up towards new all-time highs again. Now, shortly after that, we dipped back below on a bearish candle coming back down. We tried to rally back up and then failed again right here. So now it's acting like a downtrend again, and we ended up moving lower. But I've identified this place as being important. If we rally up above that, the same thing would happen. I'd have to assume that's a higher high. I've got to assume that maybe we have bottomed. Maybe this will be the first bottom I've ever experienced without a panic sell-off. But I've made this argument before as well, that so many people are waiting for that panic sell-off. You hear it all the time on CNBC. Maybe it's not going to happen because everyone's expecting it to happen. That's one thing I've learned in the market, is when the crowd gets too far to one side or expects the same outcome, that outcome may not happen. So I'm trying to answer your question. I as best I can. I would disagree that things are going to get better from here. In fact, we really haven't seen earnings numbers get revised downward on a big level, which you usually see at a market bottom as well. So I just have a hard time believing that tech stocks are going to start reporting better earnings. But if it happens and those stocks start trending up, hey, I'll be right there to be bullish with you. If you're already bullish on them, I'm not. But I'm not seeing it on the chart pattern yet. But that could happen. All right. Let's quickly go to the portfolio here. I told you I got out of USO. So ADN is the only bullish bullish pattern. Obviously, the others are bullish, but they're inverse ETFs. They're opposite of what the indexes are doing. But remember, on Tuesday, I talked about this one. Let me go back to a year chart so you can see. I was looking at this as being a potentially larger bullish ABC pattern, correcting this entire move up. I get it that it still has a sell signal, but what I was willing to do is take the risk of putting my stop right below here. I had very little risk getting in. If I'm wrong, I only lose this much. If I'm right and all it does is get back to its previous high, I can make, what is that, about 4 or 5 times what I would lose. I'll take that. I'll take that reward to risk any day. Now, I'm not saying that'll happen, but I wanted to get into something that I could have very little risk on, and I could speculate a little bit. And it has a pretty good strength rank, 92 strength rank still after that big pullback. And I gave you the fundamental reasons. It's an agricultural company. I believe that I just have a hard time believing that that this wheat shortage that the world has right now is not going to be resolved in a couple of months. It feels like it's been resolved. There's no problem anymore. No, the reason why there's no problem is we're still working through the inventory. We've got you have the big barn full of wheat still that everyone's drawing from, but there's nothing being put back in it yet. And there's going to be a crisis here. I don't know when that crisis is. I'm not a farming expert. I don't know how much wheat reserve we have, but there's going to be a crisis, and every farmable land possible in this country is going to start being used, and they're going to need fertilizer. They're going to need tractors. So John Deere and CF and Mosaic and some of these fertilizer companies, I think at some point they're going to start exploding higher again. Now, again, I'm not a fundamental trader. As my fundamental argument, I'm basing this off of the chart. Like I said, this looks like a large bullish ABC pattern, and I'm basing it off of reward to risk. I'm not taking a very big risk for the potential reward. And then I'm adding in my my minuscule fundamental skills that I have to say, give me a reason why I think I'm right. And then, like I said, if I'm wrong, I'm not going to lose very much, and I'm not afraid of being wrong on that. But so if you're again arguing with me as to why I'm getting into something with a sell signal, I went over this a little in more depth on Tuesday, but that was my reasoning behind it. And I'm not going to do this with I'm not looking to get into do this with a ton of positions. And so anyway, I'm still holding on to this one, and this one's still doing very well. I mean, look at the last couple of days where the market's been down. This has been up, not by much, but it's still holding up pretty well. And I think part of that is it's already dipped quite a bit. It's already dropped quite a bit. But this is, again, something that I talked about earlier. There are going to be stocks that have already bottomed when the market and starting to move up when the market actually collapses. And the way this could work is, the market could have an up day, and this could have a really big up day. The market could have a down day, and this could have a small down day. The market could have an up day and a big up day. And meanwhile, on the small rally within the downtrend the market has, this could have a big move up. On the big drop the market has, this could have a small drop. So it's moving the same direction as the market, but it's trending in a different way. And so small move up, have a big move up here, and then you can have the big market collapse, big panic sell-off or something. And this can have a big sell-off too, but it comes down. It still doesn't go to a lower low. And but that's what I'm saying. Some of these will already be bottoming and starting to move back up before the market does. So I wanted to try to find maybe one or two of these that we could look to get into, and this is one of them here. And I'll continue to kind of keep an eye out for others. All right, let's quickly get into. Let me go back to the other two. SARK is up again today. This is the inverse of the ARK Innovation ETF, ARKK. So I'm going to stay in this one as my hedge for ADM because it's actually still moving up, meaning that the ARKK is still moving down. There are a lot of these more speculative stocks, so it's still moving down. I am going to get out of the SOXS. This is the inverse of the chips, because the chip stocks we saw had a kind of a little bit of a bullish reversal candle. This has a bearish reversal candle right here, and it's at a, again, a previous high. It could, again, this could end up just being a pause and it breaks out again. But if the market drops again, I already have that SARK ETF to go up in value to offset or to hedge the ADM in case ADM goes down. So I'm going to go ahead. I may jump back into this one again, but I'm going to go ahead and get out of it today. Now, if the market starts selling off again tomorrow, so if it does reverse today, if it reverses today's bullish reversal, it goes into a bearish reversal tomorrow, you could jump right back into this again on Friday. Obviously, we won't have another class till Tuesday, but I would probably be jumping back into it tomorrow. If you're wondering what I might be doing, or well, Monday's a holiday, so Tuesday would be the next market day. And if I do get back into it on Tuesday, I'll wait till class to do it so I can just show you. But I'm going to go ahead and get out of it right now. So if we go over to the right side here, click on sell. I'm going to sell all 170 shares. And the current price is 65.10. So sell price right here is 65.10. And I made $1,000 profit just in those couple days I held it. That's one of the reasons why I've been using these. We're making money when the market goes down. Let's go ahead and sell that. By the way, I started this portfolio about a year ago. In fact, if I go trading history here, go down to, or right here at the top, I started right at the end of July last year. And just to give you perspective, a little bit of perspective here, started with 100,000. Now remember, we were in more of an uptrending market back then. The trend started to change last fall. And I had a drawdown. We got down to about 80,000 in the account. And again, you don't remember at the time, you don't know how long you're a trend trader. The trend was still up and we were dropping. And so you're still bullish. You're still expecting, the market to keep going higher. You're almost always going to take a hit when the major trend reverses, because you don't recognize now we can recognize that was the top, right? And it reversed. But then, again, we fought back and here we are near a major close to the end of a major correction in the markets. And we're at 122,000 or a 22% profit. Now, I don't know how many of you follow fund market or returns or understand returns, regular returns. Big fund managers that manage these huge portfolios. Now, keep in mind, I'm not managing a huge portfolio. It is a different type of trading that they do. I'll give them that. It is harder to get big returns off a $1 billion portfolio than it is a smaller $100,000 portfolio. It is different trading. I don't trade the same way big institutional traders trade. But they, if they get a 7 or 8% return for the year, they're doing cartwheels. They're getting big bonuses. They're buying a new yacht. If I do nothing else, we're making 22%. That's during a bear market and a big market correction. Imagine what our portfolio is going to look like when we can put all this cash to work on stocks that are going to be trending up because they've already taken their big hit, and they're going to start moving back up. And the software is going to tell us what to get into. Imagine it's going to be pretty exciting. boring right now, but it's going to get really exciting. So, but I'm teaching you right now how to do this, how when you're dropping, and knows the biggest thing, keep more cash. Or when we did have more cash deployed, what were we in? We were in oil stocks that were the only thing going up at the time. We were heavily in oil stocks. But we weren't blindly in oil stocks, and that's why I'm not in any right now. They started to reverse. We got out of them. But this is how you kind of protect yourself until we can start to deploy and get more aggressive. All right, sorry. I want to focus, because today is a stock specific class, and I am a little bit overtime here, but I did start a little bit late. But I do want to focus on one sector that I don't like to trade, but it's at the top of the list, and there's some interesting patterns in it. I'm not a big fan of trading utility stocks, and I'll tell you two reasons why. Number one, they don't typically move a lot. Most people buy utility companies for the dividend, and they do have some that have really nice dividends, and so that is a main reason to get into them. But another reason why I don't usually pile heavily into utility stocks is usually when utilities are trending up, that means the rest of the market is pretty bad. There's a reason why these stocks are going up, and it's because that's what these big fund managers are doing, is they're chasing the dividend. They're all trying to capture something. And if all they can capture is a dividend and that's a return, they're going to jump into that. But it's often a signal of a market bottom when utilities are leading the way. So, it typically means that you're getting into these right when the market is probably bottoming, and what will happen is eventually money is going to come out of utilities and it's going to go into these other areas. But that is something to keep an eye on. It is at the top here. You'd want to see utilities get all the way down here if you're in a nice, healthy trend, because computer technology will lead the way. It'll be up here at the top in a nice bullish trend. Business services, some of these, retail will be at the top. Some of the medical stocks will be at the top. But there are some pretty nice patterns in here. And if you look under the hold section here, go to the top of the list, Edison Company, 95 strength rank. Some of these I'm going to look at a longer term chart. You can kind of see. Let's switch the signals on to you. This, to me, is looking like the larger ABC pattern. I know it broke a little bit higher right here, but there's other. The reason why I'm still assuming that's the ABC pattern right there is because there's a lot of these other utility stocks where it didn't go higher right here, and so I'm assuming that's still wave B. It didn't go much higher. I still think that's a wave B. This is wave C, and we're going back from sell to hold, and probably close to going back to buy. Now you could wait for it to go back to a buy as confirmation. I'm not going to be getting into these just because I told you I don't really like utility stocks, but just because I don't like them doesn't mean you have to not like them. And some of these have great dividends, and if you're looking for dividend stocks, these stocks not only look like they could go up, but they could have good high dividends. That might be exactly what you're looking for. So this has a 3%, a little over 3% dividend, which is not bad at all. Another one in that group, I'm going to stick to the longer term chart here. This EXC, the second one on the list, Exelon Corp, 95 strength rank. So see, you can see this a little bit more distinct, where this looks like wave A, wave B. It didn't go higher here, and then this is wave C. Gone from sell to hold. That larger correction looks like it's correcting this larger move up, It's retraced about 50% of that larger move up. Maybe we need to go back 2 years to see that. Oh, actually, it's been a much bigger move up from there, but this still has retraced a good chunk of this big move up. And let's go to another one here. And again, you could wait for it to go back to a buy signal. You could wait till, let's see if this is a bullish reversal in the markets, how things look starting the new quarter tomorrow. That you can make a decision on that. OTTR, 95 strength rank. Now this one is a little bit more of a kind of a cup formation. And what's critical to these then is that, you got the higher low right here and a higher high right here, that you maintain that. So you don't want to see this go to a higher high. If it comes down here and goes to a lower low, that's not good. But at least you know what you're looking for. Right? This is going to be key right here. If you drop below that, that's bearish. If you break above here, that's bullish. It's acting like an uptrend. Has a little bit more of that bowl-shaped move though, but that's still a pretty bullish-looking pattern there. This was a 2.5% dividend. What was the other one? I don't know if I looked at the other one. EXC was a 3% dividend yield. This one right here, NI, 93 strength rank. That's about as low as I wanted to go with these, but this one has again, it looks like a large ABC pattern right here. So yeah, this is really looking nice here too, because here's the breakout area right here. It came back to the breakout area. It tested the breakout area right here, broke out, came back, it tested it, and now it's come all the way back. This looks like a larger ABC pattern. And this would be a deeper retracement. Looks like about a 618 retracement of that move up from here. We could check that real quick using the Fibonacci tool. By the way, if you want to learn how to understand Fibonacci analysis and learn how to use the Fibonacci tool, I do have a training on this. If you go to YouTube and go to Traders Pro page, there's a training video I did a while back on this. We dipped a little bit below the 618. It came right back above it, so it did go a little bit deeper right there. But it had everything else where it stopped at the breakout area, so that's why it does look really good. So I had a little bit deeper retracement here, but it came right to this area, significant breakout area here. So, and that one has a little over 3% dividend yield, so that's pretty good. Anyway, so those are some stocks. Like I said, you can make a decision on those. I thought I'd go over those with you. Someone commented on the medical stock. I don't have time to go through I haven't looked at the medical sector for a little while, mostly because those usually it's way down on the list for one, on the sector list, and usually those are going to lead. They're usually leading the way out when you bottom. I just don't think we bottomed yet. So now again, I could be wrong, and maybe they're starting to do well, and maybe we have bottomed. I don't know, but I'll look at those. I'll see if I see anything in there that I like. But all right, I'm going to wrap things up though. I did want to real quickly here look at the SPY. Switch it back to candles here. Yeah, look at that. Okay, so this changes everything. If we close like this, it's still very bearish for the market. We'll see. So again, that's why with candle formations, if you're basing your decision off of a daily chart, you really need to wait till the end of the day to see what that candle looks like, because it can look completely different by the end of the day. So a lot of my trade decisions are based off of end of day. I do most of my entering trades. I do most of it in the last half hour of the day for this reason. We had a pretty strong looking bullish reversal candle. What if I would have said, oh man, we're going up tomorrow, and I'd loaded up on a bunch of bullish trades, and then this is how it looks now? I'd be freaking out. So I'd like to see how that candle looks at the close, because all of these are based off of the close. Just look at this. This is the evening star. I'm going way late here. Sorry about that. But this is that evening star formation. Remember, you have a big bullish candle, a pause day. It could be a doji or a spinning top, something like this. In this case, it just opened higher and closed lower. Small compact day, and then you had the next big down candle right here. What if on this candle right here, what if at the end of the day, it was beginning of the day or middle of the day, it was down here? What if at the very end of the day, it came all the way back up to here? That's not an evening star formation anymore. But again, that's why if you're using candlestick analysis, again, on a daily chart, you have to wait till the end of the day to see what that candle looks like. And in some cases, you might have to wait till the last 10 or 15 minutes. Now, I will tell you, usually what the candle looks like in that last half hour is how it's likely to close. I've had situations, though, where I've gotten into a trade 5 minutes before the market closed on a really strong-looking candle formation, and then suddenly in that last 5 minutes, it fades or does something, or rallies, does something completely different, and that candle looks bad at the close. That's going to happen, and it doesn't do it very often, but that'll happen, and you'll be like, wow, if I would have known that, I wouldn't have gotten the trade. But at some point, you got to get in the trade, and sometimes you can get a wild move right at the close, and a lot of times I just chalk that up to just bad luck, and you kind of hope that maybe it doesn't hurt you too bad the next day, but it's just part of trading. It'll happen from time to time, but usually it doesn't. And who knows? We still have a half hour to go. Maybe we rally into the close, and that looks like a reversal candle again. We'll see. Anyway, have a great week, everyone. Remember, market is closed on Monday for the 4th of July. Have a great 4th of July weekend, and for those Canadians, have a great Canada Day tomorrow. And we'll see you on Tuesday for the next market update. Bye now.